to increase its 2013 budget deficit by 50% and has also set a 10% target for industrial output growth in 2013. What implications will these plans have on economic growth?
I think the government wants to implement a proactive fiscal policy. That is, the fiscal deficit as a share of GDP probably increase a little bit. But this is pretty much well expected in the market and also in line with our expectation. We have been expecting a higher fiscal deficit next year for quite some time, given that new leaders are coming in office and there are a lot of investment projects in the pipeline. So it doesn't really change our forecast. I think it's also to a large extent priced in the market price already. I think more importantly, what will happen to the total social financing, that is the overall credit to the economy, that is probably more important than the central government fiscal deficit. As in China's case, the fiscal deficit is probably less important than the fiscal deficit in Western economies. That is, government could loosen policies through banks, through state-owned enterprises, or through shadow banking business, rather than through central government fiscal deficit.
You mentioned the fiscal deficit issue in China is less important than that in Western economies. Why is that?
Right, because in the past several years, you can see that China in several times loosened the policy very aggressively. 4 years ago, there was about 4 trillion renminbi stimulus package, but if you look at the fiscal deficit, it was actually very, very small. So fiscal deficit is not a very good measure for China's fiscal policy. I think overall policy, the fiscal policy stance is better measured by looking at the total social financing, which include the bank loans as well as shadow banking business, such as trust loans and entrust loans. And those are sort of, I would call them quasi-fiscal operation. That is, all the banks are owned by the government, and the lendings are very heavily controlled by the government. And a lot of this lending went to local government financial projects, fiscal projects. Therefore, the total social financing, I think, is a much better measure for overall policy stance in China.
We're ending 2012 with a relatively rosy picture of recovery in China's economy. What is your 2013 outlook?
Yeah, we're turning a little bit cautious, actually. We think the current recovery will still have some room to run, but it's not likely to be sustainable throughout 2013. And that is, first half of next year, I think GDP growth will still be above 8%. Our forecast is 8.2% for the first half. Then the second half, we think the growth will slow down to around 7.2%. And the reason for that is because we believe policy will shift to a tightening stance, probably sometime in the first half of next year. Because of higher inflation and also because of concerns for the risk in the shadow banking business.